Right, and we're back again in Grace's word where Grace speaks. Okay. We're gonna run real quick. We're going straight down to the business of today. But before we do that, if you haven't subscribed, please hit the subscribe button right this instant. Turn on the notification bell. I'm sure you've been enjoying the series so far. You wouldn't want to miss out, so just turn on the notification bell. And also, do good unto others. So invite your friends, invite your customers, your vendors, your suppliers, all of them to subscribe, and so they can also get what you're getting. Now, down to the business of today. We're gonna be talking about recording of business transaction. Now, I know that sounds like just recording, for people who are used to journaling or keeping diaries or writing, you know, it's like recording is no big deal, but we're gonna be talking about recording the accounting way. Remember, when we defined accounting, we said the systematic recording, okay? So it means that there is a pattern, there is a way to do this thing. You don't just do it here today, here tomorrow, all over the place, okay? So very quickly, what does recording in accounting entails? In accounting, recording refers to the use of books and journals to enter daily business transactions and activities. Okay, did you get that definition? It is the daily entering of business activities or financial transactions in what we call books or journals. Okay, so now very quickly, I'll be telling you the types of journals that exist, or the types of journals that we have in accounting, and I'll also be giving you an extra. Okay, so just stick with me, let's go. Okay, real quick, we have 6 journals that are used in accounting. So the first is the purchase journal, the second is the sales journal, the third is the return inward journal, the fourth the return outwards, then cash book, and then you have your journal proper or general journal. Okay, now purchases journal is a book used to record credit purchases. I take it again. It's a book used to record credit purchases. Now, like I'll be talking about the types of transactions after this series. Okay, so you'd want to look forward to that if you want to know exactly what purchases means in accounting. Okay, so same thing for sales journals. Sales journals is a book used to record credit sales. Okay, like I just said, I'll be talking about the type of transaction. So to keep, okay, that's what sales journal is. It is the book used to record credit sales. Okay, I have return inwards journal is the book used to record returns of purchases. Of sales. Return inwards, purchases of sales is also called sales return. Now, let's say for instance you make a sale to someone, and then on getting to where they're going, they find out that the product is defective, or it was an order online and they found that it isn't exactly what they ordered, and then they send it back. This will be recorded in the return inwards journal. Okay, now return outwards journal is the exact opposite. You buy a product for resale from your vendor, and you realize that it is not as it's not what you ordered, and you return it. That will be returned in that will be recorded in the return outwards journal, like the name implies. Okay, now the cash book is the book where all cash transactions are recorded. All cash transactions, cash purchase, cash sales. Are you following? Cash purchases, cash purchases, cash sales, payments of salaries in cash, payments of rent in cash, received, payments of any expenses or income in cash. It will be recorded in the cash book. Okay, now quickly, the journal proper or general journal is the book where you record transactions that cannot be recorded in any of the 5 books already explained. Okay, So something like the sales of assets cannot be recorded in any of those books already mentioned. Whether it was sold on credit or cash, it cannot be recorded in the sales book. It cannot be recorded in the cash book. Okay. Uh, where you record that is in the journal proper. Okay. And also another beautiful thing about the general journal or the journal proper is that you can use it to record every transaction. So you can decide to just open the general journal and be done with it. You just open the general journal and be entering or recording all your activities for your business in it. Okay. One more thing I want to add. Uh, when we talk about recording in business, we mean recording of everything that has to do with business and that has monetary value. Okay. So for instance, now you go to the market to get your goods for sale, or you're a service provider and you go to get you maybe you go to make a client's hair or something, and on the way you buy water, just water, right? It's just water, but then you buy water. uh in accounting, that is a business transaction. Okay. It has to be recorded. How to know what to be recorded? You ask yourself, is this related to my business? That is it a business transaction? Yes or no? Is it a financial transaction? Does it have monetary value? Okay. So as long as they did not dash you that water, you bought it with your money. It is the business money you used to buy it. It is as that it's a business expenses. It should be recorded. And beautifully, before you go, oh, how many waters am I going to record? Accounting has made a provision for it that you don't have to clog or clutter your books on accounts with things such as water, 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 water. It can all be grouped into a kind of expenses called miscellaneous expenses. Okay, so if you eat, you drank water, or you, what else should I use in example? But you basically get what I'm trying to say. All of those little transactions that do not seem like big deal, they should all go into they should all be counted as miscellaneous expenses and recorded. Okay, so with this we draw a curtain on today's class. See ya in the next video. Bye.